Welcome to Manage Your Damn Money with Ben and Malcolm, where we trade in personal finance advice for entertaining conversations about money, and we're still adjusting to the very odd visual of seeing LeBron James in a Lakers jersey. Welcome world to yet another episode of our favorite show about money, Manage Your Damn Money with Ben and Malcolm, where I'm joined by my wonderful co-host and licensed financial advisor professional, Malcolm Etheridge. What's going on with you, man? How are you?
All good, man. I'm just, lamenting a little bit.
What are you lamenting about there, sir?
I took some time and ran through my 2018 goals again earlier today, and I'm realizing how far behind I am.
Oh, are you?
So we're, closing out August, and I'm looking at it, and I have like 7 out of 10 boxes still left to be checked.
Oh,
so
wow.
Got some things to do.
Indeed you do. Some work to do. Well, real quick, we normally just talk about what's going on, but I wanted to actually update folks on where we're hearing that we're getting listeners from. A big shout out to Ramona and Tristan for sending us emails saying they are listening all the way from Canada, where they say things like out instead of out. But also Kenneth. He's a British guy. He says living in Fukushima, Japan. We got some people in some interesting places listening to our show.
And I have no idea how and where they're finding us, but I'm happy that they're tuning in.
Hey, man, the internet is a blessing.
That is very true.
The internet is a blessing. But real quick, the conversation at hand for this episode is understanding the cost of healthcare. That's a really big one. And Malcolm, as you pointed out, this is a Malcolm show, by the way.
Does that mean it's a boring show? Is that what that means?
That was not the implication at all.
Okay.
I was giving you credit because credit was due. That's a topic. This is a topic we've not actually covered on the show before.
Yeah.
So it's a pretty big deal. But before we do that, as we always do, it is now time for headlines. Today's headline: Millennials are sick of old politicians, but too poor to replace them. This was a July 2018 article on Vice.com by Matt Taylor. That headline is hilarious.
And true.
And true.
I felt like I might have written that.
Indeed. Aren't millennials too poor for everything? Too poor to pay off student loans? Too poor to buy a home? Too poor for anything of substance? So instead we buy avocado toast? Millennials are sick of old politicians, but too poor to replace them. This, however, might be changing in Congress, where the average age of a legislator is about 60, closer to 58 in the House of Representatives and almost 62 in the Senate. This is one of the oldest Congresses ever, which I don't think I really realized that. When you ask young people whether they might like a chance to pull the lever for a fellow young person, the overwhelming answer, according to an Associated Press and NORC Center for Public Affairs Research and an MTV poll of people aged 15 to 34, is yes. 79% of young people think their own generation would run the show better than the current crop of career politicians out there. So that would be very millennial of us to think that we could do better than the old people.
I also feel like we probably could.
Okay, that's all right. So Malcolm's a millennial and showing his millennial stripes here.
As a millennial who's never had avocado toast in his life, I am pretty confident that.
Okay.
Yeah.
Very good, very good. So why don't more people actually run for office and satisfy that demand or that desire? Well, here they are. Hundreds of them have signed on to races, large and small, since 2016, with women and people of color in particular jumping into roles as candidates. But one enduring factor that stands in the way of more politicians becoming an army of Alexandria, Cortez copycats is the thing that looms over us all, which is what this show is about: money. The same economy that screwed young people for generations, burdening them with insane debt and catastrophically high cost of living that might make staying at home in their 30s, halfway into 30s, seem halfway reasonable, also makes it extremely hard to try and become a politician and change all of that, which is interesting, catch-22.
Yeah.
Being rich, as I think this is a very true statement, being rich has always been the easiest way to win elections in America.
Just ask the entertainer in chief.
Right. Let's just marinate on that for a second. Even for the most recent evisceration of limits on campaign spending, in 2008, 75 million outside money coursed through the national political system, and that's back when John McCain and President Barack Obama were running. Political ad spending alone reached $2.6 billion in 2008 Obama versus McCain run, and then in 2016, $9 billion was spent on political advertising one way or another, which sounds ridiculous.
That's absurd.
It's absurd, but it's also very American, you know?
But that's also how you get policies that allow things like we should be able to dump ash into the water and, bring back the coal jobs, and we want fracking in your neighborhood. And those are the kind of things that that happen when you allow people to buy your elections. Right.
The article went on to say that only 5% of state legislative seats, which are often the most appealing for young people, were held by millennials last year. So that means that less than 5% of state legislators, is occupied by people who would be considered millennials.
And that's probably the old millennials that are like 34, 35, 36.
On the edge of millennialdom. They don't even
basically Gen Xers, but they just got swooped into this whole thing too.
They're like, oh, I'm a millennial? Oh, okay, right. So campaigning means fundraising, a.k.a. rich people, and either being able to quit your job outright or take a sabbatical, things that are foreign to most millennials. And, we don't really have the economy or situation to do that.
Yeah, who's going to pay these student loans if I'm busy trying to save the world?
Right, exactly. It seems like a cruel joke, Malcolm, that our generation has been handed so many financial challenges, and yet in many cases are held back in making changes due to more money, more problems. Mm-hmm. And then just a little note, I mentioned Alexandria Ocasio-Cortez. She won the Democratic primary in New York's 14th congressional district, defeating the incumbent Democratic caucus chair, Joe Crowley, in what has been described as the biggest upset victory in the 2018 midterm elections season. She's 28. Yeah. And so she was kind of like an anomaly in terms of, whatever the future of politics holds.
She was also a bartender before throwing her name in the ring to run for this seat, which I think is very important to point out, not to downplay her, but actually to play up that achievement.
Right,
the fact that folks said this young lady who is working as a bartender and has almost zero political experience is still a better option than the guy who currently occupies this seat.
Right.
That's saying a lot.
Right. Malcolm, we do a lot of griping about our politicians, but is running for office something that I think millennials seem to kind of want to avoid, a potential solution for some of the financial issues we face?
I don't think so.
You took a long, deep breath on that one.
I don't really know anybody personally in my orbit who talks about their ambitions of going into politics.
Okay.
And I don't know how much of a thing that was for my parents or even my grandparents' generations of people when they sat around and, talked about their career ambitions. But I have to assume it was more prevalent back then than it is now. Like, for example, Barack Obama, like anybody who ever came into contact with him at any point after he was like 17 knew that he at one point wanted to at least be like the governor of a state or a senator and have some kind of leadership role to try and affect some change.
Right.
I don't really get that from anybody who I know personally, because it's just like, well, why bother?
Yeah.
Like, what's the point?
I think millennials are very disenchanted by a lot of different things that happen in the realm of politics. Yeah. And to the point, a lot of what goes on now, it seems like not a lot happens that actually affects the day-to-day lives. It happens on like watershed moments, like when the Affordable Care Act was passed or when the recent tax bill was changed and created a new law around taxes. Those are like the only two major things that weren't like executive orders, that were like actual legislation that hit the entire country. I don't know. What do you
also
think?
Part of the challenge, though, to having millennials show up in significant leadership roles in the government is folks like the lady you just mentioned, Cortez, who is considered to be as far left wing as you can possibly get. Right. Like the ideas that she has that are just so idealist, that are almost impossible, improbable at
At least.
at least,
Right.
but almost impossible. Like, free college for every person that's ever been born in the United States ever.
Right.
And, sustainable organic food for all and vending machines on corners. And, like, just things that just don't even make any sense.
Right.
That's already how people's perception of how we think as a generation is.
Right.
So lovey-dovey and kumbaya and, idealist.
Right.
And then she proved it. And so it's very easy to use her as your only population study and go, look, that's what we don't want.
Right.
So this is why we're keeping you out. So
Right.
we're never going to vote for you guys because you all don't know any better.
Right.
That I see as kind of the real uphill battle that those folks who do have an interest in taking some sort of leadership, that's the uphill battle they have to fight.
That's interesting. And just on the other side of it, people don't always think about why people would want to stay in Congress. I think this is interesting. Congress people like to keep their seats because it's a really secure road to retirement.
It's a sweet gig.
It's a sweet gig if you serve for a little while. Members who participate in the congressional pension systems are vested after 5 years of service. A full pension is available to members 62 years of age with 5 years of service. And then 50 years or older with 20 years of service, or 25 years of service at any age. A member elected after 1984, so that would be any of us if we ever got elected to, national Congress, not state level, but federal. A member elected after 1984 would have been enrolled under the FERS plan, FERS plan, and their pension payment under similar conditions, $154,000 for the top 3-year average salary, but with only 20 years of service, would be $52,000. And in 2002, the average congressional payment range was from $41,000 to $55,000, which is very solid retirement supplemental income if you're retiring.
And some of these, not even some, a lot of these folks also have other businesses that they're
Right.
a part of.
Right.
So, I'm an attorney, for example. I'm a partner at a law firm.
Right.
I take a quote-unquote sabbatical
Right.
to go, serve in congressional office. But I also am part of the law firm and receive still my payouts
Right.
as a partner of the law firm.
Right.
And so they're making money hand over fist,
Right.
literally. And then also secure health care for life.
Right.
Which is huge because, the older you get, the more expensive healthcare gets.
Right.
Spoiler alert, we'll get into that later in the show. So, it's a sweet gig, and that's part of the reason that they want to keep everybody else out, right?
Right.
You want to hold on to that seat for dear life because
Right.
it comes with such fringe benefits.
Absolutely, absolutely. So I want to remind people you're listening and watching Manage Your Damn Money with Ben and Malcolm. Today's conversation at hand, understanding the cost of healthcare. We're going to talk about that when we come back from our first music break. But first, let me remind you can always listen to past episodes of our show on Apple Podcasts, SoundCloud, Stitcher, Google Play, and Spotify. Simply search Manage Your Damn Money on any of those platforms. And of course, leave us a review, please, please, please. That helps more people find the show and more people listen to us to get all these great conversations about money. And of course, if you have a question that you want Malcolm to hit on his Malcolm's Money Minute, send it to us, info@manageyourdamnmoney.com. And of course, you can follow us on social media. My handle is @MYDM1. Malcolm, what's yours?
At Malcolm on Money.
And of course, you can catch us on Facebook, facebook.com/manageyourdamnmoney. This is MYDM with Ben and Malcolm. We will be right back. Welcome back to Manage Your Damn Money with Ben and Malcolm. On this show, we are talking about understanding the cost of healthcare, whether it's a common cold or a serious disease. We all get sick, and sometimes getting sick costs money. For those of us who are employed full time, we might take it for granted, but having proper healthcare in place can be a huge deal. That's why on this episode of NYDM, we're taking a look at healthcare costs in America. Malcolm, and for this story, we pulled our first article, which reads, the headline reads, "What Millennials Need to Know About Health Insurance." And before I go on, let me just pause and say, why'd you want to do this show? Because this was something you flagged for us to do.
Well, I thought it was important because we found ourselves in the middle of a conversation where, like, the simple facts about what is a thing, like what is this kind of health coverage versus that or whatever. We all had three completely different interpretations of how it even worked.
Right.
And so then immediately the light bulb clicked and said, well, then if the three of us are having this conversation with different perspectives, plenty of people are probably riding around listening and like either have no idea how their health insurance works, which is probably a lot of people, or have no interest in knowing how their health insurance works.
Right, and haven't bothered to figure it out.
And we're really just trying to find that space in the middle for the folks that don't know but do care.
Indeed. Well, the first headline reads, "What Millennials Need to Know About Health Insurance." This was an August 2018 article on thebalance.com by Gene Chatsky. If you're a millennial, it reads, "You're probably as healthy as you'll ever be, and you're definitely young. Does this mean you can forego health insurance? Decidedly not. Even healthy people develop ailments, catch diseases, and get into accidents. The upside is, as a young and healthy person, you'll find the cost of buying health insurance more affordable than it is for older Americans. Millennials are cost conscious and more likely to ask about the cost of treatments and coverage before getting into them. They are less likely to turn to a primary physician for non-emergency care, instead opting for urgent care centers for emergency rooms. And they're more likely to ignore their medical problems. According to research from Transamerica's Center for Health Studies, nearly half of millennials have minimized healthcare costs by skipping, delaying, or stopping care early. Currently, the federal fine for going without health insurance is expected to disappear in 2019, but that fine was by no means the only risk to going without health insurance, Malcolm. At best, you'll be gambling that your general health will stay very good. You're also likely to ignore minor health problems in hopes that they'll go away. It's also a possibility that, those kinds of issues might get worse. The big thing for millennials, especially for first-time shoppers, is easing out of your parents' coverage, which is I think 26 is the mark where you have to transition out of your parents' coverage, is really understanding the key concepts that take up costs, says Jennifer Fitzgerald, who's the CEO and co-founder of Policy Genius, an independent online insurance marketplace. Healthcare is complicated. The premium you pay isn't the whole story. If you're under age 26, current law allows you to stay on your parents' policy, but that doesn't mean it's the best option that's available to you. Do your due diligence to find the best price by comparison shopping all of your options available to you, as one person was quoted in a piece as saying. And then, of course, like I mentioned, when you turn 26, you have 60 days to get your own insurance coverage if you're still on your parents' plan. Generally, if your employer offers one, that will be the most cost-effective plan because, of course, employers subsidize the cost of your health insurance from month to month.
Right.
But these days, some employers are passing off so much of the cost to employees that you might do better on your spouse's plan or by shopping around independently. And I know a lot of small businesses do the health insurance markets, and they might give you a subsidy for it, but they don't necessarily cover the entire cost.
And then also how many people actually use that additional $1,000 or whatever it is in your paycheck that your employer gives you to go get it on your own.
Right.
How many people actually use it to go get it on their own?
Right. And that's dangerous because they're putting that quote unquote extra money in your pocket to go do whatever it is that you're supposed to do. There's another thing, and I think this was the source of the discussion you mentioned that we had on one of our past recordings. Flexible spending accounts, or FSAs. Should I get an FSA? Also referred to as flexible spending arrangements. An FSA is part of your benefits package, typically if you're employed and they offer a full package of healthcare benefits, and can be used for medical expenses, dental care, and vision care. You may also use the account to pay for eligible healthcare expenses for your spouse and your eligible dependents. The amount you decide to contribute to the account for the year is deducted from your salary before income taxes. This reduces your taxable income, saving your money on taxes, which is the benefit of doing flexible spending account. Depending on the extent of your healthcare cost, an FSA can help you save a lot of money on care. But if you contribute more than you'll need to spend on the medical care this year, an FSA can backfire, Malcolm. Any unused funds will disappear at the end of the year. And I remember, I've never had like a FSA before, but I remember working somewhere where folks used FSAs, and it was like always that end of the year, like, well, what can I buy with the money left in my FSA to, spend it up?
So I get an email in like November, December every year from my eye doctor.
Right.
That's like, got an FSA, need to spend extra money, call us.
Right.
Like, come get some glasses,
Right.
That kind of thing. Like,
Right.
So it is that mad dash at the end of the year to find things to spend the money on,
Right.
which in that case means it's probably not the best way for you to be using your health insurance dollars. You probably would be better off with a different kind of plan if
Right.
you've got that much left over to have to fight to use.
Right, and FSAs are really helpful for those with like ongoing medical conditions. And it's difficult when you're healthy. It's probably not a good use of your money because it's potentially lost.
Right.
So Malcolm, healthcare became a big deal with the passage and then attempts to repeal later the Affordable Care Act. Why is healthcare such an important thing to talk about? For millennials and then just people in general?
Well, because unforeseen healthcare costs, I have no idea what the statistic is.
Right.
But off the top of my head, I would say it's probably like 50% of people's, like, when people have huge amounts of consumer debt,
Right.
I'd say healthcare costs, hospital bills, things like that,
Right.
that are unexpected healthcare costs are probably like 50% of everybody's problem.
Right.
And you can't, try and go buy a house or buy a car or all the different things that we talk about on this show, major life milestones.
Right.
You can't do those things successfully in most instances when you have huge medical debt hanging over you.
Right.
And it could have been prevented by something as simple as signing up for the next best plan
Right.
that your company offered,
Right.
or not going to a specific doctor who's out of your network
Right.
because you have a different type of coverage that doesn't cover that doctor. All those kind of things that like I said, could be prevented with just a little bit of consumer education that we do, and then all of a sudden get in that bind, and it's like, how do I have a $30,000 hospital bill?
Right. Well,
Yeah.
and it's interesting because I actually personally selected the more expensive quote unquote plan where I have to actually pay a couple bucks every pay period at my job, but with the thought that like if something were to happen, and I'm in impeccable health, impeccable shape, you know what I'm saying, Malcolm? So, it's unlikely that I'll need to use it, but it's there for me if I need it.
There's a word that I think guffaw is the word that I'm looking for to adequately
Guffaw?
I think that's the word that I'm looking for.
Everyone go Google guffaw, as I will after this show. Malcolm breaking out big words as he tends to do from time to time. So those who are full-time employed typically don't think much about their health insurance plans. How do clients of yours consider healthcare once they're not full-time employed or like into retirement? Like, how does healthcare
So
work?
interestingly enough, healthcare planning is a part of the overall financial planning process.
Really?
So having conversations with clients about things like how to use their FSA.
Right.
So, if you're a person, like you said, with a chronic condition, for example, or you have a
Right.
medication that you're anticipated to be on through the course of at least a year,
Right.
then planning to use an FSA versus you paying for it out of pocket or, whatever is actually something that we sit down and game plan out.
Right.
But then also retirees qualify for Medicare once you turn 65 years old. And so figuring out what Medicare policy is going to be the best use of your dollars based on your health is also another game planning thing we do. Or if somebody is going to be employed beyond 65 years old and so their employer has health insurance and they don't necessarily need to use Medicare,
Right.
just knowing that you would have to pay a penalty if you don't still apply for it, even if you don't intend to use it,
Okay.
is something that allows me to kind of earn my keep,
Right.
so to speak. So there's plenty of conversation around healthcare spending that we get into, and HSA is also another popular one with folks on the opposite end of the spectrum that
Right.
we'll get into later in the show. But it's definitely one of those things that it can make or break your wallet,
Right.
to not properly have prepared for medical emergencies if and when they come up.
Right, and we'll get into the consequences of not preparing for that after this second music break of ours. But a quick reminder, you can always catch past episodes of Manage Your Damn Money on Apple Podcasts, SoundCloud, Stitcher, Google Play, and Spotify. We'd ask that you please leave us a kind review on any of those platforms so more people can find our show. Of course, if you have a question for us or for Malcolm's Money Minute, send it to us, info@manageyourdamnmoney.com. You can also catch us on Legram or Twitter. My handle is @MYDM1. How about you, Malcolm?
@Malcolm on Money.
And of course, you can catch us on Facebook, facebook.com/manageyourdamnmoney. This is MYDM with Ben and Malcolm. We will be right back. Welcome back to Manage Your Damn Money with Ben and Malcolm, where today's conversation at hand, we are covering understanding the cost of healthcare, healthcare in America. Our next little piece that we wanted to do was kind of akin to what we just talked about before the break. How does a health savings account work? And this is a HSA. Before we were talking about FSAs, this is a HSA, a health savings account. These accounts, which are offered in combination with high deductible health insurance plans, provide a unique opportunity for people to save. Better still, they afford triple tax advantages. Contributions are tax deductible, earnings accrue tax-free, and tax-free withdrawals can be made for qualified medical expenses. So it kind of covers a lot of different things in terms of tax benefits. If your employer offers an HSA, health savings account, it typically works just like a traditional 401k. Your contribution is taken out of your paycheck on a pre-tax basis, so it's not taxed before it goes in. Your employer may also kick in a contribution. However, if you have an HSA on your own, you still get the tax break. So that's all good stuff. And to be eligible, you must be also enrolled in a high deductible health plan. Translation, your health insurance plan, whether you have a plan through work or on your own, must have an annual deductible of at least $1,300 for an individual and $2,600 for a family. Your HSA dollars can be used to help pay the health insurance deductible and qualified medical expenses, including those not covered by health insurance, like dental and vision care. And the deductible is the amount that you have to pay on medical services before the insurance company kicks in what they're willing to contribute. So deductibles vary on, depending upon what plan you get, but you have to meet that typically before health insurance costs kick in.
Right. It's also important to include, though, that these plans are for, not to discriminate, but they're generally for younger people.
Right.
Because they're for people like myself, I may not be in impeccable health
Like I am.
Like Ben claims to be.
Right.
But I have an HSA,
Uh-huh.
which means I have a high deductible health plan.
Okay.
Because I go to the doctor once a year.
Right.
Like I go get a physical. I say draw every piece of blood you can need to draw for every test you can possibly run because I'm not coming back.
Right.
So for the next 364 days, you're not going to see me.
Right.
So get it all while I'm here. And so for people like that, the HSA works because you spend less money on that premium, that money that gets drafted out of your paycheck every month or every couple of weeks or however you get paid. And it allows you to accumulate those dollars for yourself. Like an HSA is a piggy bank, essentially, that you can use toward next year or the year after or the year after.
But only for healthcare related.
But only for healthcare expenses.
Right.
But you can use it for things like, things that aren't typically covered by your insurance. Like you can pay for prescription costs, for example, if you ever have to get.
Or like contacts.
Or contacts or glasses or, dental procedures are covered under there. So I personally use my HSA every year to pay for these expensive dental procedures that I keep finding myself having to get. Right. Like root canals are like $2,000 a year.
You should just get porcelain veneers. Come on, man.
I can't wait until I'm in the tax bracket that I can actually afford to just have them rip them all out, put new ones in, and rehab my whole mouth. That's like hilarious. An episode of HGTV. Like I just want them gone and forget about it. So yes, in the meantime, I use the HSA to pay for things like that. But it's a good way to not have to be penalized financially for health insurance you're not going to use because you're in impeccable shape, quote unquote.
And if I heard you correctly, it rolls over from year to year, so you don't lose the money.
Right. And you're also, so you get a tax deduction, like you mentioned, for the contributions into the plan. But then you're also allowed to invest that money.
Oh wow.
So if you put more money into the HSA health savings account than you're actually going to use that year, you can invest that in the stock market the same way you would like your 401k or anything else.
Hence them saying it's like a 401k.
So it allows that money to grow on your behalf so that once you do become an older person who maybe has a chronic illness or your healthcare costs are higher, you started saving for it a long time ago like you did for your own retirement. And now you've got this pool of money that you can use for some of those healthcare costs.
That's interesting.
Down the road.
That's interesting.
It's also where I think personally the healthcare space is going. So where, for example, not to completely nerd out on you, but just, because we're on this, I get to dig into it. So the same way, saving for retirement used to be your employer's job and not so much yours. So, your employer gave you a pension, you work a number of years, and we'll pay for your retirement for the rest of your life. That essentially was the way healthcare worked up until probably, 2025 maybe is what I'll give it. And all of a sudden the 401k showed up in like the 80s and your employer said, we'll give you a certain amount of dollars, every year. We'll contribute on your behalf. But for the most part, it's up to you to save for your retirement. You're off our payroll once you walk out the door. That's essentially the shift that we're starting to see with health savings accounts, where the employer is saying, we'll make an annual contribution into that thing for you. However, you're going to have to start using those contributions and start contributing to it yourself and pay your own way because you're dragging down our profitability.
All this while it's record highs in the stock market. Very interesting.
Record highs in the stock market, record high employment.
Indeed. This is America, as they say. Well, beware, though, any funds you withdraw for non-qualified medical expenses will be taxed at your income tax rate plus a penalty if you're under 65. So you have to make sure that the thing that you're using the money for is an actual medical expense. And how do you like say and make sure that it's like a qualified thing? Do you have to like submit it or something?
Well, you can ask whoever the service provider is whether it's going to qualify as a medical expense on your HSA. Also, HSAs are privately run a lot of times by banks who are in the business of managing HSAs. So like Optum Bank, for example, is the one that mine is through. You could call them and say, if I do this transaction for this specific medical procedure, is it going to actually get approved under my HSA? So you can get things like that pre-cleared. Also, places like CVS, Rite Aid, where you go to swipe your card for over-the-counter medicines that are covered, prescriptions that are covered, even the little like knee braces and arm braces and stuff they sell at the pharmacy, those are covered. But if you swipe your card through their terminal, your HSA, your Visa or MasterCard HSA, if you swipe it through their terminal, it determines whether or not it's a qualified expense.
Oh, wow.
So if you tried to buy like a bag of chips or something, not saying I know this from personal experience,
Right.
but if you tried to buy like a bag of chips or something with that card,
Right.
it actually would leave you hanging and say, no, you still owe us $1.
Wow.
We covered all the other stuff,
Right.
but we're not covering that bag of chips.
Those Doritos.
Right. So it's coded pretty well to be
Interesting.
able to accommodate those kind of things.
Okay. Well, transitioning a little bit, something that's really a real big deal and something where we talk about consequences of not having your medical situation in order in terms of health insurance. What medical debt does to your credit score. This was a July 2018 article on consumerreports.com by Donna Rosado. You do everything you think you're supposed to do. You maintain good health insurance. You choose in-network doctors and hospitals. You pay the bills you think you owe, but despite your best efforts, you could still wind up having problems with a medical bill that could affect your credit standing. Nearly 3 in 10 insured Americans had an unpaid medical debt sent to a collections agency. According to a recent nationally representative Consumer Report survey of 1,000 adults who had medical expenses over $500 in the last 2 years, of those, 24% didn't realize the bill was owed, and 13% said they never received the bill in the first place. Another 10% said the bill was sent to collections mistakenly, even though they had already paid it. And Malcolm, this actually happened to us, to my wife, like literally as we were going into closing of our house.
Wow.
Where they found this like bill for $485, and they were like, "This went to collections so long ago." If I remember correctly, the issue was the insurance company. The bill got lost in translation, and it never made it to us. And it was apparently already paid for by the insurance company. And it was just something that the service provider never actually sent, or it got sent to collections, but it was never put in the mail for anyone else to receive.
That happens so often.
Right.
And it's amazing to me how the credit bureaus, whose job it is to report these things to the people who are going to determine whether or not you qualify for the thing you're applying for,
right,
take their word to be the gospel, but they don't necessarily do enough due diligence to make sure the thing that's being sent to them is in fact legitimate.
Right.
They throw it back on us, the consumers, and say, well, it's your job to check your credit file and dispute anything that looks awry.
Right.
Well, shouldn't it also be your job to make sure that the thing you're reporting to the people who I didn't even ask you to report to in the first place is accurate? But, you know, I'll put my soapbox to the side, get back to medical bankruptcies and medical debts.
Indeed. But people should know that medical bills, like any unpaid debt, can do major damage to your finances if left unresolved. The delinquent bill will eventually show up on your credit report and drag down your credit score. Nearly 1/5 of Americans say their credit score has been negatively affected by unpaid healthcare bills, according to the survey. Monitor your credit report, dispute the inaccurate charges, and if the bad debt doesn't disappear, write to the credit reporting agencies to request that the debt be erased and provide any proof that you have from you or your insurer. And like,
see, why is that my job?
Yeah, it was actually, so it ended up being a simple process for us in this instance. Because the insurance company had a very clear record of having paid the actual item, and they presented that to like the people who were doing the closing of the house and all that, so it was fine. There was some process they prescribed. But to your point, it was like, this is some other thing we have to deal with that's really not even our fault.
A lot of times, you're right. You call them or you write to them and you say, hey, what is this? This thing isn't even accurate, and you've been reporting it and they go, oh, my bad. And it's just so cavalier. Like it's like, well, wait a minute. Like you're affecting my ability to buy this house that I'm trying to buy, and you don't even care to it's just very frustrating. If you can't tell by like I'm now sitting on the edge of my chair and like clenching the armrest, like it's very frustrating that they take their word at face value.
Right.
And then it's also frustrating that the like medical billing process is so convoluted.
Yeah, it's
so
crazy.
You know, you send me a bill, then you also pay for part of the bill,
and I gotta pay for the rest of it.
And I don't even know, based on what you sent me, what this code means and how much of it you should be paying versus what you said you're going to pay. And I have to take my insurance company's word on it. And it's just so many things, and it's so easy for them to abuse it, which is why I just don't think we'll get to universal health care in this country. It's you know.
Yeah, it would be a tough system to.
It's complicated by design.
Indeed. So what to do? One thing you can do is know your rights. New regulations that kicked in last September make it harder for medical debt to hurt your credit score. The 3 major credit reporting agencies, TransUnion, Experian, and Equifax, Equifax, that good old Equifax, have to wait 180 days before putting an unpaid medical bill on your credit report. So you do have 180 days. I think people should make a point to, like, after they've had some kind of medical service, be diligent about checking the mail and checking, like, did the bill come through? Did the insurance company cover it? Because that's a way to keep a record in your own mind of what's happened and what hasn't happened, rather than just taking for granted that it, like, worked itself out.
Yeah.
The change gives you more time to navigate what is often a lengthy dispute process. If you have a problem with your insurance coverage or you think a healthcare provider charged you incorrectly, this is also something that was interesting that the article said. You can make a deal. Yeah. Which is kind of counterintuitive. If the bill is legitimately owed but paying it would be a struggle, try to negotiate with the healthcare provider to lower the amount or to write it off. Nearly 40% of people in the Consumer Report survey negotiated payment, and 57% of them were successful in lowering their bill. The tab may be reduced if you pay the whole amount up front, which is interesting because as a business or an entity that's doing business in the world, a hospital can actually claim your non-paid bill as a loss on their taxes. So there's a benefit for them getting something rather than nothing altogether, and you can use that as leverage to lower the amount that you're having to pay.
But also the willingness to negotiate with me on what I owe you tells me that you know and I know that you were charging me too much for the service in the first place.
Right.
Like, if you're saying, well, I'll take 60 cents on the dollar, it probably was only worth 60 cents on the dollar to begin with.
Right.
Like, but we have such a black box of how much medical services actually cost.
Right.
That there's just no way for. So it's a mess.
Indeed. Another element that was actually pretty interesting and makes sense. Don't put the debt on your credit card, and this is why. You will be charged a higher interest rate, and it will look like regular debt to creditors, so any protections associated with medical bills won't apply. So if you essentially wipe out your medical debt and transfer it into a consumer debt product, which is like your credit card, it no longer looks like the issue of a medical issue that might have been like a severe.
You just look really irresponsible.
Right. You just look like you were out buying Prada bags. Like, instead of, you had like a really big medical issue that came out, which is something that I didn't think about, but when it was outlined, I was like, oh yeah, that makes a whole lot of sense. Another option is to ask your medical provider for a payment plan. A lot of hospitals and healthcare providers will offer installment payment options with little or no interest, Malcolm. Some other things to remember before we close out the show about healthcare: lower payments for coverage typically means fewer benefits, lower levels of coverage, and higher deductibles when something happens. So a lower monthly payment may come at a cost, and that's a big deal.
Well, I mean, that's essentially why we were talking about the fact that, like, folks who are younger tend to be healthier. It doesn't guarantee that you will be, but folks who are younger tend to be healthier. So as you transition into not so youngness, you then have to reassess how you're actually paying for your health care, what options you need to have covered, all those kinds of things. You don't necessarily want to always be, winging it as if you were 25, 26 when you first signed up.
What's the intervals that people should be reassessing their healthcare needs? Is it 10 years, 5 years?
It's really on an individual basis. Like, I could be extremely unhealthy at 22, and you could be extremely healthy at 90. Right. Like, it really is just a matter of, how well you take care of yourself, whether you're a vegan or not. I think vegans probably won't live as long as everybody else just because they talk so much about being a vegan that I feel like at some point your mouth gets so dry and then you choke and it
affects your whole system.
So if you can't tell, I have a vendetta against vegans.
I see it a little bit.
But, seriously though, if you live a healthier lifestyle, you could still be super healthy at 80 years old versus me at 30 eating cheeseburgers every night for dinner. So it really is no like clear cut way to assess it, but you do also have to take stock of, are you on some sort of medication that you're going to be on for a long time? Like, do you have a chronic illness that's recurring and expected to stay around for a while? Those are the kind of things that should factor into as you're signing up at open enrollment time every year for that next plan, or sticking with the one you currently have, or stepping it up to the Cadillac plan that covers every single ailment you could possibly have. And,
Right.
You know, if nothing else, it's probably best to overinsure
Right.
than to underinsure. Because the consequence for overinsuring is maybe you spend an extra few $100s
a year
every year for your policy. The cost for underinsuring is you probably
higher.
spend a few $100,000 for some, you know, catastrophic event that you just couldn't have planned for.
Right. Another thing to keep in mind when it comes to healthcare costs before we close the show, fines for not having coverage are being dismantled by the Trump administration, but not having coverage can still cost you, especially if you have a serious medical need without coverage. As we mentioned before, if you're not covered, you pay. And when you can't pay, try to negotiate the bill and or get on a payment plan. And of course, as I mentioned just a moment ago, reassess your healthcare needs, especially as your lifestyle changes. If you get married or if you have kids, sometimes if people get married, it might be more advantageous to get on a particular spouse's plan than for each person to be on their respective employer's plan.
So look at them side by side.
Absolutely.
You know?
And see which one is a better deal on the whole. And then lastly, don't be afraid to read into the details of the plans and read up on the definitions if you're not clear. I think typically most of the healthcare plans and statements that I've been given as an employee, they give you that breakdown of like, you know, they're in columns. This is how much you pay. This is the deductible. You know, spend some time with that and get, you know, acclimated with it. And I think that would do a whole lot.
I know you're going to laugh at me for this.
I'm listening.
But if it's over $100, my rule of thumb, I call and ask them to explain it to me. And folks in medical billing aren't always necessarily as familiar with the coding as I guess they should be.
Sure.
And so they make mistakes too. People are human because people are actually physically typing these things in.
Right.
And sometimes they'll actually catch something, or, you know, even because they don't want to have to.
They don't want to talk to you anymore.
They don't want, right. They don't have to go through the trouble of explaining it to me.
Right.
They'll say, "Oh, we messed up. We were supposed to take off another 10%."
Right.
That has actually happened twice that I can think of right now.
Okay.
So just, you know, it's worth picking up the phone and calling and just saying,
"Oh, Malcolm, but it takes so much work and time to do all that."
Hey,
goodness gracious.
I'm trying to manage my damn money.
Indeed. Well, we want to remind you can always catch past episodes of the show on Apple Podcasts, SoundCloud, Stitcher, Google Play, and Spotify. And of course, please leave us a review on any of those platforms. That helps more people catch the show. If you have a question for Malcolm for his Malcolm's Money Minute, or you have a topic you want us to cover, send it to us, info@manageyourdamnmoney.com. And of course, you can catch us on social media, Instagram. I'm at MYDM1. Malcolm, how about you?
At Malcolm on Money.
And that's on Twitter as well. And you can catch us on Facebook, facebook.com/manageyourdamnmoney. Thanks to our partners once again here at Montgomery Community Media for another great show, and to our crew for an awesome effort. Until next time, be good with your money.
Peace.